And I'm muted. All right, here we go. We're muted. Okay, there we go. All right, so there we have. I'm taking a look at a few of the positions that we have on and a few of the things that we're watching as the sun is coming into the office here. All right, first up, we continue to focus on the long side in just a handful of symbols, things like gold, things like gold miners, staples, real estate and utilities have fallen off the list. Healthcare is still on the list. So at the moment, I do have just a handful of swing trades on, and right now they're working out fine. I'm going to continue to follow the very small group of long stocks, of long setup stocks, while the list of the swing shorts that are possible is outnumbering that easily 3 or 4 to 1. But then that's if I were only to stay in that mindset, this is probably the most important topic right now in terms of what I am looking at to build a portfolio. And it's maybe one that a lot of folks maybe haven't thought about yet. And that is, and you can see there in the notes, I'm thinking about three things. One, what's the sanity check? In a world of just chaos and a lot of volatility at the moment, where is the opportunity? It's not necessarily day trading with the chaotic volatility we've seen. Swing trading, as I've mentioned, 4 to 1, 3 to 1 ratio of potential long puts to long calls, which is fine. That's not my trading life is, I don't mind which way the trend is. I just want to be able to take advantage of a risk controlled entry. But then the thing that I keep reminding myself right now is, am I playing the long game in a way that's allowing me to look at what's on that shopping list, what's on my wish list? What are those stocks that when, for example, let's just bring up a really popular one, something like NVIDIA, which was the darling for so long. And if I were to look at NVIDIA and people were buying this thing at 140, 145, 150, 53 is the high, do we not like it at 106? Right? Do we not like it on a pullback? Has the narrative changed? Let's grab another extreme example, right? Bitcoin. Is Bitcoin's narrative no longer valid if it slipped below 100,000? Whatever that wish list might be for you, I'll tell you a few things on my wish list. But when you're looking at that long game, what is on the shopping list? If I like Apple, and I wasn't one of those poor retail traders who bought the thing at 255, 30 points lower. If there was something that I wanted, it was $30 cheaper than when I looked at it before. Wouldn't that be considered a sale? Right? And there's an old saying, Wall Street throws a sale and nobody comes. But I know the other part of your brain, as well as mine, is saying, but Rob, this is happening. There's so much uncertainty. I'm sure there's 9 things we could all list that right now are scaring the bejeebers out of us. And then I want to remember, I trade what I see, not what I think. And there's a simple fact that I've reminded myself of, and that is, historically, bear markets don't last long. In fact, in yesterday's top tier Outlook newsletter, I got into a lot of statistics going all the way back to 1999, what the bear markets were, how long they lasted, from when to when were we in a bear market. And there's one stat that's really glaringly obvious when you look back at the last 3 to 5 bear markets, depending on how far back in time you're going, whether it's 99, whether it's 2007 to 2008, that time. And that is, they are lasting for less and less and less time, which means not that I want to FOMO into long positions, but there is a certain sense of urgency right now. It's a little too early to do anything, right? But it's not too early to prepare. It's not too early to plan. So how do I want to plan for these things? Well, first of all, let's start at step number 1. what's the shopping list? What are those things that have been on the radar that you say, if this symbol gets down to whatever that level is, gosh, I would love to scoop that up. Maybe it's Nvidia, maybe it's Apple. Maybe when you look at your current positions, you're not seeing enough. Rog, right now, staples are doing great. Right now, healthcare is doing great. This is not about hedging. I don't believe in hedging. The only hedges in my life are in my lawn. But what I want is a set of symbols that have the probability over time of moving higher, and not always for the same reason, right? So ultimately, what I want to remember is I'm putting this list together, is let's start at the top of the food chain, because that's the way I'm going to start looking at everything. Start at the top of the food chain. What does that mean? Well, are there opportunities to pick up some really good, valuable entries in the indices? I would say for now, I would leave that alone, right? The indices aren't quite ready for prime time, especially with the uncertainty and the type of price action, volume levels, and support that we've broken down through. Doesn't mean that we won't do it soon, but I really exhausted the indices first. I said, no, Russell, Dow, NASDAQ, S&P, let's put them on the back burner. Then I'll go to sort of the opposite side of opportunity, and I'll ask myself, what about staples? What about real estate? What about utilities? And I'll start to think a little bit more defensively. So let me give you two positions that we've taken most recently in the Sector Secrets Mastery. The two most recent positions that we took in this whole process of wish list, shopping list, right? Building a longer time horizon portfolio. This is what we're looking for, right? Coke, Altria. So this is sort of what it is that we can position ourselves for when we're willing to buy names that at the moment are feeling very unloved, but going forward, if giving 6 months, a year, 2 years, 5 years, even longer, that there's that probability of moving higher. So notice that none of these things are going to be bought when the news was good. None of these things are going to be bought when it looks like there is nothing but good news and sunny skies in the horizon. It's going to feel uncomfortable. That's the first thing we have to accept. So then I'm going to start looking a little bit more deeper into, well, Rog, what were those things on your wish list? And I'm going to share with you a couple of things right now. Energy has been on my wish list, right? It's not a great trend. It's been moving sideways for the better part of a year, but this is the look of energy. The closer energy can get down to about $84 a share, XLE will be something that I would love to put in my longer term. You want to call it buy and hold, you want to call it position trading. I prefer position trading, right? Which has a longer term, usually months, if not years, time horizon. So XLE is, as I like to say, on the radar. All right, what else is on this list? Well, I've been looking at XLC. All right, well, XLC has been doing really, really well, and it doesn't pull back often. It's pulling back right now. And you might say, Rod, what is the Communications Services Select Sector SPDR? This is an ETF, and if you think about longer term holds, gang, one of the things that we are considering is what's the cost of purchasing this thing per share? What's the cost of owning it? What are those operating costs? If you compare ETFs to mutual funds, you realize why in 2008 ETFs started to exceed the popularity of mutual funds because of those different management costs. So they're very low in ETFs. It's ideal for longer term. XLC is another one on the radar. This is Meta. This is Google. This is Netflix. This is Disney. This is a whole slew of telecommunications like Verizon, T-Mobile, Charter. And notice over the past, this is 2003, forward into 2025, not 2003, 23, 24, and 25. Look how seldom this thing has been pulling back. Look how quickly, once it triggers a mean reversion, it pops back up. That not that the past is necessarily indicative of the future, but it's a characteristic of its personality, right? So I'm going to play that probability of the personality of, as long as this thing is in a trend, when it triggers a mean reversion, I want to get to work. And that mean reversion is going to trigger just above $95. And that mean reversion will be valid just to about $92.50. That's the specificity of the wish list. what is it that I can see the characteristics of probabilistically moving higher, from what level, and then waiting for it, right? So part of shopping is first putting the list together. There's a couple symbols that are on my list right now that we're going to be talking about in the Sector Secrets Mastery. Things like what I did not that long ago. These positions are not even 2 or 3 months old. Who was thinking about Coke and who was thinking about, Altria back in late 2024 when S&P was hitting all-time highs and folks were tripping over themselves buying Nvidia or Apple or whatnot at higher, even Netflix at higher highs. So it's a little counterintuitive, but again, start with the shopping list and then get into the prices like we just did right there. And then, a lot of folks are saying, but Rob, what are you talking about in terms of hold time? What is what could we possibly benefit by doing this? Here's a look at XLK. This was an alert we sent out in the Sector Secrets Mastery for this longer term weekly position portfolio session that we've been doing since mid 2022. And this is one of the first 2 or 3 positions we put on. We bought XLK at $122 to $120.50 per share. That's about $89 ago. Those are things that we want to be able to say, hey, I bought this. I have that longer term position trading mindset. And now fast forward about 2.5 years, this is what we've been able to take advantage of. It won't look like this in the beginning, right? We have to have a little bit of preparation, a little bit of future think, say, hey, what is possible if I put that wish list together and wait for that price? So something a little bit more recent was McDonald's. All right. So this is just kind of going forward. If you pick up McDonald's at $253, it's sitting at $316. So what I'm saying right now is this is that next round of things that, like XLK, like McDonald's, has the possibility of moving higher. We have to think now. It doesn't look pretty, but we have to have the discipline to say, hey, but we know what could happen if we can wait for our price and then scoop it up. And XLE and XLC are great ways to do it. Now, these are 2 ETFs. So the cool thing about ETFs is you get a lot of bang for your buck. They're not terribly expensive, whether you want to go the per share route or even frankly leaps, which is not something I tend to do. I want to buy the shares. But again, there's the triggers and the setups are exactly the same. For those of you saying, Rog, I don't want to buy a 97 or in the case of McDonald's, a $253 stock. Remember, there's fractional ownership. Clearly, that's something you can do. Per share is fine, but then also, the same triggers I'm talking about, the same prices I'm talking about would apply to that option, to that leap as well. XLC allows me to scoop up for roughly, in the mid 90s, Google, Meta, right? Netflix, Disney. So think about the bang for your buck you're getting. One of the other symbols that a lot of folks have been asking me about, Rog, what about Netflix? Is the narrative over? Take a look at the chart. If you're going to go shopping, if you're going to go wish list buying, if you're thinking, Rog, at some point, Netflix may split, whatever it is, this is what a mean reversion looks like. If Netflix has been on your radar and you're budgeted for either a leap or an $850 stock, this is what it's going to look like. So yes, Netflix is in the zone right now. That's the kind of thinking. Rather than buying these things, can you imagine having bought this thing? Someone bought this thing way up here at $1,100 rather than waiting for the thing to go on sale. And again, look how often the sales come. They don't come that often. And look how quickly they bounce out, which kind of goes back to historically, bear markets don't last that long, right? And if we can keep that mindset right now, there is a lot of opportunity right now. So pessimism is just a lack of plan, a lack of planning, a lack of a process in disguise. So whenever you hear people talking pessimistically and, oh my gosh, this is what's going wrong and this is going to be the catastrophe, all I hear is, I don't have a plan. And I know if you're tuning into a show at 9 a.m., 30 minutes before the bell's going to ring, you're a planner. You're someone saying, Rog, I know there's opportunity and I want to listen to someone who's been here and done that before and give me some ideas on how I can take advantage of where those opportunities are happening now. So on one hand, people see problem, we're going to see opportunity. Some people are going to say pessimism and disaster and downtrends, and we're going to think, hey, something somewhere valuable that I want on my shopping list, on my wish list, is going on sale. And again, this is not something you have to do every day for hours a day. For those of you that are wondering, for me, we kind of distill it to a session once a month in the Sector Secrets Mastery Room. And then I spend usually no less than about 30 minutes, but no more than about 45 or 60 minutes per week. And I'll look at my shopping list. I'll set some alerts. And I've got alerts in those symbols that I've just shared with you. My nephew wants Netflix. And so a lot of times my shopping list is going to have things that my family's been saying, hey, you know what, Raghee, I want to buy this, but I know you're going to tell me don't buy it at a new high. My other nephew, he wants to buy Bitcoin, right? What did I tell him not to do? Don't frenzy in at 100, 102, 105 like everybody else. So by looking at this chart, I think most of you in just this 18 minutes are going to go, wow, your nephew probably bought around 50 something, correct? And he's probably going to buy again. He has that longer term position trading mindset. And by the way, he's been doing this for the better part of about 4 years now, waiting for those opportunities that when something's at 100,000 like Bitcoin, it never seems like it's going to pull back, in this case, $25,000 per coin, right? No, it's never going to happen until it does. That's the sale. That's the Black Friday opportunity. So everybody here knows when Black Friday is coming, right? Everybody here knows when Prime Day is coming. Put that list together. And by putting that list together, you're a whole lot less likely to buy junk, right? How many folks go to Black Friday and buy that thing that they never needed because it was inexpensive? That's the danger. So start with the wish list. And I've shown you 3 things, even 4 things that are on mine or my immediate family. Saying, hey, Rog, do I buy Bitcoin now? I hear it's going to 250. Doesn't mean it isn't going to 80 or 70 or 65 first. Pick those things up on sale. So keep that opportunistic mindset. Pessimists simply are telling you they don't have a plan. Anyone talking about how horrible things aren't looking at where the opportunities are. Now you will be. So I hope everyone's going to start building up that wish list. And this is what's on mine. And again, keep in mind what XLK did. Keep in mind what McDonald's, Coke, Altria did. This was the same mindset that's led us to, 4 very good positions in that weekly position portfolio that we have. All right, gang, that's the plan. All right, stick with it. Find what it is that is on your wish list, or you can certainly use what's on my wish list and be patient, wait for those opportunities, and we'll take advantage of this great sale. Historically, bear markets don't last long, gang. So there's a little bit of urgency here. Time to get to work. I'll see y'all in the next Charts and Coffee. Be good to each other.